Now, how many of you heard about carbon? I think you heard it from Willie a couple times today. How many are you getting paid for sequestering carbon? If you're not yet, you might be sometime. And I know you've also heard about soil health. So we are very happy today to have this next session sponsored by Anuvia. And we're going to start off with the Anuvia CEO, Hugh McGillivray. I try that every time, and I always mess it up. But we're going to start off with Hugh. He's going to talk a little bit, and then we're going to pass the mic around, and we're going to learn something.
All right. I guess I got one. Yeah. So thanks very much, Mike. Appreciate it. It's really a pleasure for us to host this panel today. It's really a panel on some really interesting subjects, I think. When you think about sustainability, soil, and carbon, it all relates. And we have three individuals on the stage and a moderator that understand a lot about this space and hopefully can shed some light on it. Why are we sponsoring this? A little bit about Anuvia. We're not a household name today, but someday we might be. We produce a bio-based fertilizer product. It's a dry product. It really has three benefits, I think, for the farm. Number one, it improves yield, incremental yield. So when we substitute conventional nutrition with bio-based nutrition, we see a lift in performance because of the nutrient efficiency. We're returning organic matter back to the soil, so we're feeding that soil system, the microbes in the soil, so it contributes to strategies around soil health and soil regeneration. And then we provide a means to a smaller environmental footprint because bio-based nutrition will leach less than conventional nutrition, and it has a smaller carbon footprint because of the way we manufacture it and because of the use efficiency of the product. It's a very simple technology for farmers to adopt because it plugs right into the common practice that you're operating with today. It plugs into your equipment, plugs into the handling, warehousing of that type of technology. So it's not something that you have to go through a lot of change to make it work, and you can adopt it very quickly. So with that, I'm going to introduce Willie. Willie is a good friend of Anuvia. He does an excellent job of moderating, so we're excited to have him moderate this session. So thanks very much.
Thank you very much, Hugh. Great. I'm Willie Vogt, Editorial Director at Farm Progress, if you forgot that I was here an hour ago, so that's really good. Carbon. It appears that we have been hearing about a lot of that element in society these days, but what does it mean for your farm? This issue goes beyond using cover crops and reducing tillage, straight up. But what we're looking at today is we've assembled an excellent panel to dig into this topic from a lot of different angles, and I did dinner with a couple of these guys last night, and I still have a headache. So this will be good for you. It's a good information source. It's going to be really good. This panel of experts will dig in, and you can be a part of it too. Remember, virtual audience, to share your questions in the chat area. We'll put them into Slido. Those of you here, same thing, using Slido as we have been. As a matter of fact, we're going to use Slido in a moment. Let's put that poll up now, Matt. We'd like to know something about you. This is anonymous, so that's safe. You can answer this, and then we'll go on, and I'll introduce our panelists while the poll is up there. Each speaker this morning, like the last panel, will take a few minutes to talk, and then we'll go into the Q&A. So get your questions ready. And I want to introduce who's here with me today. First up today will be Jason Weller. He is the president of Truterra, a subsidiary of Land O'Lakes. He joined Land O'Lakes in 2017 as Senior Director of Sustainability, and in 2020 was appointed president of Truterra, which is a farmer-led sustainability business unit of the cooperative. He serves on the board of the Soil Health Institute and is on the board of the Soil and Water Conservation Society. Then we're going to hear from Jay McIntyre. He's the CEO of Arva Intelligence Corporation, which is a third-wave machine learning company focused on sustainability and optimization of global row crops. He does a lot of work with data-driven recommendations that match seed genetics to environment, aiming to reduce over-fertilization and to direct where biological amendments can be value added. And his machine learning stuff is pretty interesting in terms of how he can manage data and make decisions. And our final speaker may be familiar to the Iowa people in the crowd. I present Bill Northey, who has served as USDA Undersecretary of Farm Production and Conservation from 2018 to 2021. And FPAC managed farms and conservation programs, loans, and the federal crop insurance program. He also served as Iowa Secretary of Agriculture from before that. Let's just go with that because you were there for quite a while, and that was really good. Jason, I'm going to turn the floor over to you.
Thank you, Willie. Good morning, everyone. Jason Weller with Land O'Lakes at TrueTerra, and as Willie outlined, TrueTerra is the sustainability business at Land O'Lakes. We started about 4 years ago, and we're very proud to still be the only agricultural and farmer cooperative retail sustainability business here in the United States. What we offer is an opportunity through our ag retailer network, a chance to connect with farmers, and through good agronomy. It's not an additional add-on conservation or this topic on carbon we're going to have where we're trying to just pursue carbon for carbon credit's sake. We start first with good agronomy, good crop success, good profitability success, but then through our precision conservation platform, the TrueTerra Insights Engine, we offer the farmer and the farmer's agronomy advisor or their conservation advisor additional insights and value, getting on top of the profitability by field and even subfield scale to really chase profitability opportunities, but also low yield results and how you can enhance management to drive profitability. But beyond profitability, then what's happening with your soils, with soil carbon sequestration, organic matter accretion, greenhouse gas emissions, erosion, nitrogen use efficiency. And it's a live interactive platform where the farmer's in control. They get to understand how changing and tweaking management practices, adopting different practices, different equipment usage, how that drives profitability, as well as enhancing the natural resource profitability and sustainability. What TrueTerra does, so we work with farmers in our co-op system, but then downstream we work with a growing group of food system partners, including Campbell Soup, Tate Lyle, PepsiCo, Coca-Cola, Nestle Purina, including Cargill, the cotton industry, the cotton board, and they're interested in partnering voluntarily with farmers to understand what are the current practices they use and what are additional incentives farmers need to adopt additional practices around nitrogen management, good soil management, and really coupling the entire food system anchored in good conservation and good agronomy. And then what we're going to talk about today then is this new emerging marketplace where these food system companies as well as companies outside of the food system. So for example, we partner with Microsoft. Microsoft is one of our customers, and we'll get into it during the program. Microsoft wants to become carbon negative, and so they're putting cash on the table. They want to do it in a way that's voluntary, and they want to purchase the carbon removal services of farmers and essentially compensate farmers for putting carbon back in the ground through good conservation and good soil health practices, and cash on hand pay producers for that carbon service. So really look forward to today's conversation. I think it's a hot topic. There's a lot of confusion, and it's still an emerging marketplace. The market is not yet really robust. There's a lot of discovery we're all, I think, experiencing together. And at the end of the day, what TrueTerra offers is a way to partner with a farmer cooperative system, with a local farmer cooperative retailer, and with a farmer-owned business like TrueTerra. And we really believe that, yes, farmers are about feeding the world. Farmers are absolutely the economic engine of rural America. But beyond that, farmers are the solution to protect and enhance the environment. And what we want to do is connect farmers with opportunities now to not just produce grain and be compensated for their grain commodities, but now be able to transact and generate new income revenue streams from new commodity markets, in this case like carbon, or in the future other environmental services like clean water and water availability. So thank you again for the introduction, for being part of the program today.
Thanks, Jason. I want to echo what he said, is that, as farmers, you're already managing an environmental asset. And so carbon is just going to be part, not to be, no pun intended, it's the exhaust. We can measure it. So it's not something different and shouldn't be a different system. It should be all part of the same system of optimizing and generating. So let me just give you a quick introduction to ARVA. And we started back in 2016 to try to address some of these problems we had on our own farm. So, what hybrid do we pick? We see hybrids performing, the same hybrid performing very differently within a field and across different fields. Are we over-fertilizing? When I ask my retailers, what's the optimum fertilizer to apply, they say there's one answer: what's your yield goal? And so that's not the right answer. Biologicals, man, we had people showing up with bugs in a jug and it's the universal solution. Well, it's not, as you all know. And now we have carbon markets. So what we tried to do is to solve this problem. We collected a bunch of really smart people, people above my pay grade, to could do this, and try to start applying data and analytics to answering these questions. So just to give you a quick background, how do you do this? If we want to understand, well, the boxes over there, they didn't get through, but seed selector is on the top. Then you've got predictive analytics or prescriptive analytics, designing inputs to environment, and the bottom would be carbon. And we backing up is you need to collect a lot of data. So for every part of your farm, right, we can measure both not only the yield and what were the inputs, but we can know what is the topology, what is the soil chemistry, what is the carbon, and what are the geophysical properties. And we collect all of that into a data set and then put that at, we call it the quarter acre kind of pixel. We collect about 500 variables to be able to analyze that. And then that allows you to run machine learning. And machine learning doesn't replace the farmer or the agronomist. It helps us be more intuitive about what we're doing because it helps us understand and can surface what are the yield drivers at that spot. This is a kind of a collection. Again, the PowerPoint didn't come quite through, but harvest analytics, seed selector, AI crop planning, so that we can get our tools or figure out what is the best recipe to go to the retailer and get our best pricing early in the season. And now carbon. Why should you care about carbon? Again, you're managing an environmental asset that has value. And I'm pounding the table and telling you carbon prices are going to go up. And I'll give you a couple of anecdotes. I came out of, spent time in the energy space, and I've been spending a lot of time in Houston and Dallas. Exxon needs 135 million tons of carbon credit a year to be carbon neutral. Pioneer Natural Resources, a company I used to work for, now needs 5 million tons a year. And they're just a mid-sized oil company. Now, if you put all of the other people who have claimed they're going to be carbon neutral, they've got to come through the ag space to get those nature-based credits. So what you have is a very valuable asset. So now how do we play? You don't need to do anything different. Yes, there will be some management practices that you can change that will produce carbon credits. But the most important thing for you to do is think about how do you play in the carbon markets is data. And I've used this term to say the difference between a low-value carbon credit is a peso and a Swiss franc is going to be the data. Data you're already collecting. You have yield data, you have data on the inputs that you put in, and you have soil samples that are georeferenced. If you just collect those and get ready for the carbon markets, you're going to be able to create a high-value carbon credit. And that's where we want to work, to help and with people like Jason, to where you're basically already using the data to optimize the agronomic insights on your farm. Now we can turn those into a new source of revenue. So just quickly, again, how do you get started? What our view is, let's get carbon ready. I think today is too early to be signing up. You can monetize today, and Jason and I have a way of monetizing that if you want to monetize that. But let's get carbon ready and be really transparent, because I think our ability to connect not just the CPG companies, but the energy companies who need nature-based credits is coming, and that'll be here soon. Just real quickly, kind of a background, I'll also say this, the science of carbon accounting is going to evolve very rapidly. Today we have these mechanistic models to just estimate carbon. This project that we lead for the Department of Energy is a $3 million project over the next 3 years that's going to be building machine learning models based on the actual carbon fluxes coming off of the soils. So what we're doing is we manage 6 of these towers that manage nitrous oxide emissions and methane emissions in corn and rice systems. And it's just going to be really exciting. So there's 5 teams. We're the only commercial team leading one of these for the RPE. And then we're working with different carbon registries and carbon aggregators to put the data behind and support the science. So again, data that you collect today is going to have real value for you down the road. And that's one thing I want to just, if you remember anything, prices are going up and you need the data to support it.
Very good. Great to be back in Iowa, and certainly glad to be here with you all today. This one right here. Okay, there we go. And so I'm going to hit a few things. You know, when I went off to USDA, we weren't talking about carbon much in Iowa at that time, and now it seems like about every other headline in agriculture is about carbon. So one of the things I did when I came back was to talk to folks and say, what are you working on? What's interesting? And a whole lot of folks said, I don't understand carbon and where that's going and what's going on. And I'm here to tell you, I don't know exactly either. But I believe several things, and these are the things we'll talk about. First of all, I believe sustainability, carbon, it has legs. It's going to continue. It's not just the political flavor of the month. There is plenty of form to build out yet. Certainly there are some things that we need to be able to watch and others that'll give us hints of what that looks like. And at the end of the day, do what Jason says, make sure that we're doing the right things agronomically out there. And then some good things can happen in carbon. So the issue has legs. Certainly you hear a lot of conversation from government right now about carbon, but behind that, if you really look, there's a lot of conversation in that business community. And both Jay and Jason talked about that there are folks out there that care about this. And I would say maybe one of the most important groups, certainly consumers care some about it, they're paying attention to it, obviously folks are watching them, but when you watch investors, and certainly that's a large part of who many of the companies are paying attention to. In fact, I would argue that's what some of the press releases are targeted at, not necessarily farmers. You know, you got the situation with Jason, he doesn't have to have investors out there that he has to appeal to. He's thinking about farmers.
To be clear, we have owners I have to be worried about.
Yeah, you do have owners.
Yeah. Yeah.
But there's certainly, and why do investors care? First of all, they know that people want to feel good about what they're investing in, but they also want to not be surprised. And they don't want the company they invested in to show up on a headline someplace that they're not paying attention to sustainability. They're doing something wrong. They got caught not covering some things that the public cares about. And so I think certainly the investor community is a big driver out there, and I believe there's reason to believe that'll continue to go. And the reason they are is because they're reading the rest of the environment, not government. Government's there and government's responsive too, and that will change as elections change, but I do think that it's coming. And then internationally, you see this same discussion in the UK and in Australia and New Zealand and other places as well. Not everywhere, I don't know if it's very much in agriculture in China right now. There's a little bit in Brazil, but not a lot the same way, but certainly in many places, the discussion around climate is there. I would say as well, the train hasn't left the station. This is not done yet. We don't know what the price of carbon is going to be. That's absolutely true, but we don't even know exactly how we're going to measure it or exactly what our customers want, right? And probably Microsoft wants something different than United Airlines wants. They maybe want credits that look a little different. And so maybe you'll be better fit for Microsoft's and somebody else will be a better fit for United Airlines. And so there still may be a differentiated market. Maybe we'll have the equivalent of number 2 yellow corn and we'll see some consistency, and maybe we won't. I don't know. Maybe it'll be more of a specialty kind of market. So there's a lot of pieces. You do see USDA looking at kind of putting carbon into everything they're doing, whether it's EQIP programs or CRP programs. Everything is talked about in the relation to carbon. Not as much as we did in the last administration, or certainly much more than we did in the last administration. We didn't do that much around carbon, although we talked about it, we thought about it. Certainly this administration's thinking about it a lot, and I think you'll see some additional scoring in some of the programs going forward that'll be based on the carbon sequestration as well. And then the measuring, certainly Jay talked about that. We've got to have tools to make it easier, not harder, to measure. And that makes the buyers feel more comfortable. It certainly means that we don't get tasked with a whole lot of paperwork out there. Price we talked about. I would argue too, a lot of our conversation right now is around carbon markets. Okay, I produce a little carbon, I sell it to somebody, I walk away with a check, and that's good. But I do believe, in fact, I think you talked about it this morning just a little bit around ethanol. There may be supply chain markets. Maybe I want to keep that carbon credit and sell low carbon corn to an ethanol plant so they can sell low carbon fuel to California. Maybe I can be part of a chain that captures some part of $200 a ton instead of $20 a ton. I don't know, and I don't know what these other places will look like, but we've talked a lot about supply chains kind of pulling for economic or ecosystem services. Not a lot of them have developed, but it would seem like this is one of those places that definitely could happen. So who do we watch? How do we figure this out? Certainly government. There will be pieces that may pull some of that kind of continuity together, and we discover that it's only carbon if. And it only counts in Paris, and that's what others care about if. You know, that it's certain permanence or a certain additionality or you know, especially around soil carbon. That is a real challenging thing to be able to measure. But if we can measure fertilizer reduction or other kinds of things, those are more sure. And so those are those potential high quality credits. So watch those pieces. Who are those buyers of credits? Do they have the best interest of agriculture at heart in what they're doing? Are they trying to create a business? And that doesn't mean that it's a bad thing. If they're trying to create their own business, they may bring opportunities. But I would definitely look for those that understand agriculture to be able to watch. Certainly the buying of crops or livestock. There's a discussion around livestock too, and the supply chain opportunities that could happen. And then we're going to have new tools. We are going to have new inputs, biologicals, fertilizer. What's the CI score of your anhydrous? Well, I don't know mine either. In fact, I'm not sure my supplier knows mine right now. But we might be choosing to buy not just on the cost per ton, but the CI score as time goes on as well, because that may help us with one of the markets that we're participating in. And so we'll see how those all come about. I do believe those new technologies around biologicals, they're going to come at us so hard and fast, but there are some real opportunities there. There are some things that we're figuring out. It's just that we may not figure them out as fast as they all come, but they will be important to us. And then the science of understanding even the soil biology is going to be important to us, and some of the other things around that. So lastly, what do you do now then? I mean, you know, we talk about all these pieces. I would say number one, learn. Pay attention, watch it. If it's going to be real, it is something you're going to care about as time goes on. Certainly try a few things. You don't have to jump in head first into everything. Try a few things. If you're not using cover crops now, try it on, maybe you want to try it on a back 80 or something. Try it, figure it out, so when somebody drives down your driveway and you say, I want to participate, you know whether it works or not, or you know what type of land, or you know how much you can get seeded into the fall. And then we know it's more than cover crops, as was said. It's more than no-till, but those are ways to be able to try some pieces. And then figure out your own footprint. I don't have a perfect carbon intensity model for you all to use right now, but we're all going to have to figure that out as time goes on. I know the dairy industry is working right now. Land O'Lakes Dairy is saying they're going to have all their producers have a carbon intensity analysis done in their farm. I think by 2025 they have methods, they have folks to help walk folks through, and until we find out our baseline, we don't know how far we are away from either net zero or what additionality looks like or those kinds of things. So figure that out as stuff comes along. Don't get married to it. Certainly don't miss selling your corn for a good price, and certainly don't miss spraying your soybeans when they need some spray on them because you're chasing $10 an acre that may or may not be there. Certainly take care of the things. And then lastly, remember probably what's good for the soil, certainly it's good for your bottom line. If you can get a little more carbon in that soil, you're probably going to capture a little more of that moisture, and that is pretty darn important in years like this in many parts of the country. You're going to build a more resilient soil, and it'll give you some opportunity as time goes on to be able to potentially participate in those markets that come along as well. So glad to be here. Look forward to the conversation.
Thanks very much, Bill. I don't need that.
You don't?
No. You noted investors and reading press releases. I thought it was interesting. The Wall Street Journal reported this week that over the pandemic, more than $51 billion went into ESG funds. Those are environmental, socially responsible kinds of funds. People are moving their money to places they feel good about. So I thought that was interesting. This was fantastic. Matt, can you put the poll back up now so we can see the results real quick? Yep. Got a couple people in here doing it. That's good. And then I think we still have a lot of people in here who might be a little... Train hasn't left the station, as Bill said, so that's really good. I want to ask you a question, Jason, because I saw what you've talked about, and you and I have talked about True Carbon in the past. You say $20 a ton from Microsoft. What is that per acre?
It works out to about $8 to $10 an acre.
Okay. Just trying to put some perspective on what that might mean. So I don't want to change a lot of practices for $8 an acre. So it's more about the data. What are we trying to do?
Yeah. So it goes back to Jay, Bill, made a comment on this. I've had some pretty raw conversations with some producers recently, and they're like, "Look, let's get real here, Weller. I may gross $1,200 an acre on my corn crop, and you want me to do what for $10 an acre?" I think it's a different way to position this. Is that look? What we're not trying to do is have producers wholesale change their operation, wholesale move into new equipment that requires precision crop protection, precision nutrient management, wholesale changing your chemistry. How do we over time incorporate additional practices and ease into this conversation while always stay focused on the bottom line return on the acre? And as Jay indicated, we too believe that the price of carbon is going to increase and go up as more and more demand increases from downstream buyers within agriculture and outside of agriculture. And I strongly agree with Jay, your point. Now's the time really is to start the discovery and start preparing operations, beginning with your crop success, but also beginning to collect the data and become really good data stewards. And essentially, by handling that, driving profitability on the acre, driving return on the acre through good agronomy, you are also then going to be positioning your operation for a future marketplace, whether that's today or whether that's going to be next year or 5 years from now. And so carbon credits, greenhouse gas credits, water quality credits, biodiversity credits, all these environmental service opportunities we believe are coming. That's what happens when you are successful in really managing the acre, your soils, your inputs, your irrigation, and the good results that can now be additive to that good crop success come through data management, but foundationally good agronomy.
Yeah, I think if you'd have said data management 5 years ago, we'd have been booed out of the room. But I think now everybody knows they've got that data, and it's how we pull it together with your partners at Winfield United and with ARVA and people like that. It's interesting. We had a really good question. Well, that changed. I'll take the one that's at the top now. Who's going to own the carbon credits on leased ground? Because a large percentage of farmland is leased in this country.
Yeah. I'll
hey, why don't you take that?
Yeah, so the carbon credit is going to be originated by the farmer. And so we are working currently with the carbon registries about how that credit transitions. But I mean, it is the farmer, the tenant farmer, who's going to be able to occasion that, not the landowner. Now, I think landowners will ultimately look to potentially include that in their leases. And so there's work going on right now. And it's different state by state because it's the state laws that will dictate what happens here. But the answer is, who owns the carbon credit is the one who originates that. That's the farmer. And one of our perspectives is, complete transparency, that we want to be able to give the farmer the option to create the credit, hold that credit, or monetize it today or in the future.
And let me jump in too. I think Jay's right. The person that created it is the person that is a farmer. Now, there may be some interaction, especially if it's soil carbon. If it's because I use different fertilizer, then absolutely that should be the tenant's credit. Now, if it's soil, now you get kind of a permanence kind of question, and I've heard it, an argument for folks to say, you know what, we're going to split those soil carbon credits. After all, I want my landlord to have some skin in this game of not renting it to somebody that tills it up too. And so therefore, if I can get him a little bit, I'm likely to still farm that farm 10 years from now. I'm also likely not to have to pay anything back if some contract says that. So there may be some nuance there, depending on how that carbon was created.
So I'll just put that $10 right on the rent.
Yeah.
That'll help. I mean, you're right, though. I mean, because when you were talking about that, Jay, the first thing I kept thinking was, I know landlords that are going to say, wait a minute, I'm going to want a piece of the action. So if we can give them that and make it an incentive to keep me on the farm farming that ground, that makes perfect sense. That's excellent. Carbon credits have a potential beneficial revenue for farmers. Philosophically, how does it differ from carbon tax or cap and trade beyond the volunteerism? And, you know, cap and trade, that goes back a ways. Bill, do you want to talk about that a little bit from the policy standpoint?
Yeah, I mean, I do think that I'm just a big believer in voluntary markets. So I really do believe that every one of us has a different ability to comply and participate in carbon markets. And for government to come up with one solution that fits all, first of all, I was at USDA, and I know that's not an easy place to be able to try and do that, right? So actually, growing corn and a carbon intensity score of growing corn doing the same thing in Louisiana may be different than what your score would be in Minnesota. Because it freezes. It doesn't, you know, the carbon continues to break down in Louisiana over the winter, but it doesn't in Minnesota. And so how do you get that number right everywhere? And so I would argue that's one of the challenges with a true kind of requirement that every farmer be net zero or whatever the number would be, but others might participate. I might have livestock. I can either be better or worse than somebody else. I might, you know, be farming on weekends, and I was, and I might not be able to do some of the things that somebody there all the time is able to do. And so I really do think it's important to be able to have that market that people can voluntarily participate in. A cap and trade is really hard to get. How do you describe what a farmer should do? Now, you could have a cap and trade on the diesel fuel that's going onto the farm, and all of us are paying more for diesel fuel. We have an incentive to use less, and we figure out how to do that. But the actual farming operations, I think, are really tough.
Aren't carbon credits supposed to be an incentive for the buyer of the carbon credit to find an alternative and change their business model and stop buying carbon credits? Isn't that what the whole idea is about, Jason?
Yes, I mean, to add to what Bill just said, to be clear, this isn't cap and trade and it's not a carbon tax. It's a transaction between a voluntary buyer and a voluntary seller. On the buyer side, just in the last year, globally, over 1,000 companies have voluntarily committed to reduce their greenhouse gas emissions, and they've either invariably made commitment on 2030 or 2050, reduce emissions by 10, 20, 30, 50, 100%. So these companies now have made commitments to their shareholders, to their investors, and so it's starting to become a binding commitment from these global companies. And so what the rules of these commitments require is they have to do it within their own four walls. So if they're an energy company or manufacturing company, whatever it may be, transportation company, they need to first demonstrate that they've reduced their footprint through their production processes or transportation, their equipment usage, energy. But then once they get to that wall where there's nowhere else they can really go, then that's where the offset market comes. That's where carbon credit exchange happens. And so we see it's not going to be next year or 2 years, but as we get closer and closer to 2030, you have all these global companies who have made these commitments in-house to their investors, their shareholders, their executives. They're going to start to run out of low-cost solutions, and they'll start to look to now weighing what's that marginal return. Do I pay a really expensive retrofit of my equipment, my energy purchasing, my vehicle fleet, or do I start now to go into a voluntary carbon market? And that's where agriculture is unique, as the only industry, the only sector in the world that can not only look at its own footprint, but can be an offset to others. And a little bit different frame on this too, Bill, Willie, if I can just add to this.
Yep.
is that we need, in agriculture, need to think of ourselves as a competitor. So there are going to be other ways to remove carbon from the atmosphere.
Yes.
And nature figured this out about 3.5 billion years ago, plus or minus. It's a little process called photosynthesis. And you guys have been using that elixir for, I don't know, 10, 20,000 years, right? Farmers have been using photosynthesis to grow food, and that's the same process we need to get carbon back into the ground. And our nearest competitor are trees. So then the next nearest competitor is 8, 10, 20x more expensive per ton of carbon, which is going to be direct carbon capture air, very advanced equipment to strip carbon from the atmosphere and liquefy it. But that technology is going to continue to improve and advance. So we in agriculture now have an opportunity to be cost competitive, scalable, but it also runs in the direction nature wants to run with food production. So how we treat the land, how we manage the soils, how we manage our inputs are also going to be bottom line, good for ROI in the acre, good for crop fertility, good for field resilience, and position now those acres to transact carbon credits and be competitive, cost competitive with other technologies.
Yeah, I'd just like to throw in on top of that. So we have, the great thing about agriculture is we have optionality. We can go play in the carbon offset markets, but we can also be part of the supply chain. So think about the conversation this morning on ethanol, we can create that last mile connectivity to get that biofuel into the regulated market in California. And so having conversations with people that are ethanol producers, connecting that last mile, calculating the intensity of that grain can be part of that. So I think we have, again, it's an asset that we are stewards of, that we can now help monetize and help create this. And again, think about it, if we have 300 million cultivated acres in the US, we could do all 1 ton, that may be aggressive, that's 300 million. We could go down the block in Houston and we could fill that order. So that's my point of why I think prices are going up. We're going to get net short. And agriculture has to be part. Cannot get to the climate Paris Accord goals without going through agriculture. So
I am going to ask the question that is the elephant in the room. It's the question I've asked you before, and everybody gets asked when we talk about carbon credits. Why are producers that have been utilizing carbon sequestration practices in prior years being penalized by not being able to enroll in current credit programs? Jason, I'm going to put that on you first, but I think Bill can talk about it as well. Do you want to take it first?
I would love to hear Bill's answer on this.
I'll go to Bill. Bill, why don't
it's something we've tackled. So like I said, we had our proof of concept. We've had our carbon program. It's something we wrestle with. So right now, to be clear, it's a bit of a buyer's market. The buyers in this marketplace are setting the rules of engagement. The registries where we go and transact credible transactions. So think of this as like it's an electronic commodity certificate. In order to generate that commodity certificate, you have to meet the requirements of the registry. And the registries have established the rules where they want this concept of additionality. They want practice change. And they have a kind of a purist view that, the year you apply the first time cover crops, that's when additionality starts, and that's when they start the carbon clock. At Land Lakes, we have a little bit different view of that. So in our program, we actually have up to 5 years look back. We tried to push the envelope as far as we could from our marketplace standpoint. So we allowed producers that had made a change up to 5 prior crop years, back to 2016. And that allowed them to, frankly, bank credits now over 5 crop years. So it's not a 1-year transaction, it's up to a 5-year transaction. So yes, it's $8 to $10 an acre, but then you multiply that by 5. Well, now you're talking maybe $50 an acre. So some of the producers we've enrolled, they're looking at a very significant carbon check payout because of a practice change they made. That doesn't handle the producers that made switch into no-till or strip-till and applied cover crops 10, 20 years ago. And this is an absolute policy gap that I'm sure Bill has all the answers on. But it's also a private sector gap. That's something we're working really hard on. In that, how do we position growers, and I think Jay's talked about this, maybe a carbon transaction, carbon credit isn't it, but maybe low carbon feedstock for biofuel, maybe low carbon grain or low carbon feed into beef and dairy and pork. Those marketplaces are also looking for supply chain solutions. And producers that have made that practice change, by definition, have lower carbon intensive grain coming off those acres, and they're perfectly positioned for a differentiated carbon market experience. Not a carbon credit sale to an oil company, but maybe a carbon sale to an ethanol facility or to a feed business or to a low carbon grain purchaser.
I'll just give you one example of that. As my co-founder Mark Isabel testified before the Senate Ag Committee, recently about don't create a one-size-fits-all. But he had exactly this problem. His organic matters in his rice fields are 6.5%. He's got some of the highest organic matters in the state of Arkansas, so he would be better off plowing it up. But he can also produce a bushel of rice on 5 gallons of water. And so that's the credit by having the system understanding of what is the carbon intensity and what is the inputs. I think that's where we're going to go in terms of the stackable credits and opportunities. It's not just one just for carbon. We need to look at the whole picture.
I would say that they answered it. We're not going to change additionality, the fact that there needs to be change. In fact, you know, what Paris looks like or others, they say where you at and how much improvement you get made. And so therefore, where you're at starts somewhere. And right now, in some cases, that's already with no-till and cover crops. But I do believe, I think it's possible that over time, the supply chain value may be more than the carbon sales. Right? And frankly, right now, I wouldn't do anything for, I mean, I certainly would rather have 6.5% organic matter, and I wouldn't till that up for $10 an acre, right? And nobody that made those changes thought that they were going to get $10 an acre. They didn't do it that way for that reason. They're happy with what they have, and they're certainly happy if they were able to plant this spring and not have to lose any moisture while they planted the crop, and that's going to be really good for it in the next 3 weeks when it's hot. So I do think that market will change over time, and certainly it feels like a victim, but you're not. You're actually farther down the road than many of the others.
We are down to our last minute, and I really want to ask this question. So we're going to do this, and then we're going to get out. If we don't have to do anything different, we can get paid for carbon credits. That creates a great new revenue stream, but has the environment been improved? So in other words, if I'm already using cover crops and I plant cover crops this year and I get credit for that carbon I put in this year based on the what have you done for me lately plan, have we really made a difference in the environment?
Yes, because those fields are still pulling carbon in the atmosphere.
Okay.
And they're still providing environmental service. And by the way, they're also growing food. And so yes, I'm very confident that those producers should be compensated.
And I would say, Mark, I'll quote Mark again and what he said to the Senate committee. If, you know, putting a carbon sequestration is like putting a towel at the bottom of the bathtub. Let's turn off the spigot, and that's permanent. If we can reduce the inputs, then that's permanent. And so, yes, the environment is a huge beneficiary.
Let's give these guys a round of applause. This has been a deep conversation.